Gentlemen, good day and welcome to Music Broadcast Q2 FY24 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashit Kukian, CEO, Music Broadcast Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining the Q2 FY24 earnings call for Music Broadcast Limited. Joining me on the call is Mr. Rajiv Shah from our IR team and our investor relations partner, Strategic Growth Advisors. I am delighted to share with you the financial results of our company for Q2 and H1 FY24. These achievements are a testament to the hard work and dedication of our team, as well as our commitment to driving growth and innovation in the dynamic world of media and entertainment. In Q2 and H1 FY24, we experienced significant progress in our financial performance. Notably, our profit growth exceeded our revenue growth, a clear indication of the strength of our business model. During this period, we achieved EBITDA margins of 23.1% in Q2 and 23.5% in the H1, making a substantial increase of 480 basis points and 450 basis points respectively. These improved margins are the result of our ongoing efforts to control costs over the past few years, combined with our revenue growth leading to the enhanced operational efficiency. It is worth emphasizing that despite the festive season for this year falling entirely in Q3, our Q2 figures have displayed strong growth, which underscores the market's resilience and buoyancy. At Radio City, we have been implementing various strategies to strengthen our presence in the radio industry. During the quarter ended, our market share increased to 19%, up from 18% in the previous quarter, according to the ad check markets. This growth underscores our commitment to delivering quality content and connecting with our audience. Our omni-channel presence has played a pivotal role in this success, enabling us to leverage our extensive networks and provide maximum value to our clients. This quarter witnessed a positive development wherein the Ministry of Information and Broadcasting has approved new DAVP rates for government advertising on private FM radio stations. These rates have been revised after a gap of 7 years, with the base rate seeing a substantial increase of approximately 50 to 60%. This adjustment likely aims to account for changes in the advertising landscape and ensure effective communication of government messages through private FM radio. In terms of advertising sector growth, we have witnessed significant development. The real estate industry, for instance, experienced a substantial 40% year-on-year increase in the advertising spending. The pharmaceutical market expanded by 30%, while the auto industry exhibited an impressive 56% growth compared to the previous year. The food and beverages sector showed a commendable 21% growth, and the government advertising increased by 12% year-on-year. On the flip side, the finance industry encountered a decline of 6%. This insights into the sectoral growth enables us to adapt our strategies and tailor our services to the changing needs of our clients. As we navigate the evolving mediascape characterized by the digital transformation, we are making significant strides to remain at the forefront. We understand the importance of being platform agnostic and have embraced digital technology to create, distribute, and engage with our content seamlessly. Our digital business grew by 24% in the H1 FY24 compared to the previous year, reflecting our ability to adapt to changing preferences in the audience needs. Our inventory utilization in H1 FY24 stood at an impressive 73%, showcasing the efficiency of our operations and our ability to maximize our resources. Radio City continues to be a popular choice for both existing and new clients, with 40% of total clients on the radio platform choosing to advertise with us. Among new clients, 35% opted to advertise on Radio City, further cementing our position as a preferred advertising platform. We are also proud to diversify our revenue stream, generating 36% of our revenues from various sources such as properties, proactive pictures, digital ventures, sponsorships and special events. This diversified approach continues to our overall financial resilience and stability. Moreover, we have secured the second largest client count share in the industry, standing at 39% in the Q2 of FY24, a testament of our strong client relationships and the value we provide. Now coming to the financial performance highlights of Q2 and H1 FY24. For H1 FY24, revenue grew by 14% year-on-year to rupees 105.5 crores. EBITDA grew by 41% year-on-year to rupees 24.8 crores, while EBITDA margin expanded by 450 bps to 23.5%. I would like to highlight here that our operating profit growth has outnumbered the revenue growth. This was mainly on the back of our conscious efforts over the past few years to control costs that have paid off, allowing us to take advantage of better operating leverage, which has led to faster rise in profitability. Adjusted profit after tax, which is adjusted for interest on NCRPS to the value tune of 3.8 crores, stood at rupees 5.1 crores. Q2 FY24 revenue grew by 8% year-on-year to 52.4 crores. EBITDA grew by 36% year-on-year to rupees 12.1 crores, while EBITDA margin expanded by 480 bps to 23.1%. Adjusted profit after tax, which is adjusted for interest on NCRPS to the tune of 1.9 crores, stood at rupees 2.3 crores. This strong performance in H1 FY24 provides a solid base as we look ahead to H2 and beyond, where we anticipate further growth during the festive season. We are committed to capitalizing on these opportunities and sustain our upward trajectory. Our cash reserves stood at rupees 305 crores as of 30th September 2023. Our liquidity position remains strong as stated previously. This liquidity allows us the flexibility to take advantage of present and prospective future opportunities. In conclusion, I want to emphasize that the evolving media consumption behavior of the Indian audience, influenced by the abundance of content options, have opened up an avenue for the radio industry to embrace digital platforms while still preserving radio at its core offering. Radio City has proactively invested in digital technology to stay in step with the current trends and changing preferences of our audience. With this, I would request the moderator to open up the floor for Q&A. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Mehendale from Robo Capital. Please go ahead.
Hi, am I audible?
Yes, you are.
Okay, great. So my first question is on the recent DAVP ad rate change. These rates, now that they have gone up by 50% or so, how much incremental EBITDA can it generate just because of the rate change?
You're talking about the DAVP rates, right?
Correct.
See, the current contribution of DAVP is about 7 to 8% to the overall business. With the increased rate, possibly a percentage or two contribution will increase. So that increase will be that 10% of the overall revenues that we talk about. So any change in numbers will be reflective of the changed increased revenues that we talk about.
So, sir, I didn't follow that fully. So out of the total revenue, are we saying that 7-8% is due to 7-8% of the revenue will undergo this rate change?
Yeah, then because that's the contribution government is giving. You're right.
Okay, perfect, great. And the second question is, there have been try recommendations recently to the ministry, which has 2-3 key recommendations, including, having the FM on mobile, etc. On that, there are two, questions I wanted to ask. If we go back in time and look at, previous 5-7 year recommendations, what is the rate of acceptance by the government? Is it, it will help if you can throw some light on previously, how these recommendations were dealt with. And specifically to the new set of recommendations, what is your own, internal perspective, whether they will get accepted, when they will get accepted, and how, can it expand the market and so on?
Yeah. So I'll answer it in a little different manner because anything to say on whether the government will accept it or not is matters to speculation, because strongly try as recommended, and this is after going through various interactions with the industry, with the radio industry, with the other industries, and so on and so forth. So both whether it is allowing independent news to be on radio, and also mandating if that comes from the ministry to have FM radio enabled on mobile sets, is something which the government has to take a call, the ministry has to take a call. But if it is allowed, then the impact on the radio industry will be tremendous, because with the reach that is available on mobile, and if that is opened up from an FM tuner, the kind of additional reach and ability of radio to reach across the country will be far more higher. Number one. Number two, news as a genre in itself is something which is highly attractive from a consumer point of view, because of the various, things that a consumer looks, and that's how news. India is a voracious news country where news is really, taken a lot more seriously, and there are categories of advertisers who believe in news. So if these two get recommended, it's no doubt to say that it will have a huge impact on the revenue front for the radio industry. However, like I said, it all depends on the government to kind of give us the final say on this. So beyond this, I cannot say anything because that will tantamount to speculation, and I don't think it will be fair for me to speculate on that.
Right, sir. Actually, my first set of questions was actually, tackling that in the sense that how, if we look at history, typically what is the government, has done in the past? Do they accept everything or some, if you can just comment. I understand that, you will not be in a position or you don't want to comment on what will happen, but what is the history?
In the current recommendations, at least on the mobile set, we are a little gung-ho because there's not much of a challenge out there, because we have the qualifications on which we are asking this to be done is a lot more manageable from a government perspective. But news, there is certain sensitivities the government always keeps carrying on. So one is not sure as to what is the current mindset on news to be allowed, because this is not the first time the industry has asked for it, and neither where the trial recommendation has come. But the trial recommendation this time has come on independence, which was far different from what it was in the earlier recommendations. So, honestly speaking, beyond this, I will not be able to comment, and all I can say is that we'll have to wait and watch. And if it happens, it's great signs, and we should all be happy is all I can say.
Great, sir. Thanks. My last question, if I may, is on the ad rates. How was this quarter? I mean, if you look at ad rates, are you seeing some upward traction or they're flat? If you can comment on that.
Yeah. So currently, even if you, I don't know, you said you were part of the last, Concall that we had. But, till the time the inventory saturation doesn't happen, rate increase usually doesn't happen, because there is a room for you to increase revenue through volume route. So I can clearly say across the industry for this quarter, everybody has taken the volume route, because there is still bandwidth for additional revenues to be generated with the volumes that is available, cut across markets that we talk about. So marginal increase or no increase is what I could say from a rate perspective for the quarter.
Great, sir. Thanks a lot.
Thank you so much. To ask a question, please press star and 1 now. The next question is from the line of Riya Mehta from Equitas Investment Consultancy. Please go ahead.
Thank you for giving me the opportunity. My first question is in regards to what are the current ad timings for us?
Ad timings, you're saying?
Yeah.
See, we are all running around an average of 14 to 15 minutes advertising, which is a standard that has been running over the years. Peak season time, those numbers can go up by about 10-12%. But otherwise, it's about 14 to 15 minutes that we talk about.
And what is the maximum we can stretch this amount up to?
No. If you want, by logic, there is no ceiling on how much you can take, because unlike television, so you can content if need be. On a very extreme point of view, you can even take 60 minutes, but that's not how it works, because there is content that has to be given. But there is room and flexibility still to take more if it is required. I'm not getting exactly what question you're asking, because in radio there is no ceiling that how much you can take. So there is bandwidth if you want to. But we all take our calculative understanding of content, consumer, advertiser, and the balancing of that is what we normally do when we do, because there will be markets where you'll have oversaturated in few markets. So we are very clear about how to go about those so that there is no disconnect with the listeners when it comes to content.
So my question was more in regards to after a particular bandwidth of advertisement per hour, we might see loss in market share for us. So what is that particular minutes per hour?
I didn't get your point. Could you repeat that, please?
One second. So my question is in regards to the kind of bandwidth or the amount of advertisement per hour which we can totally take. So currently it's 14 to 15 minutes per hour for us. So till what extent can we increase this so that it does not impact our audience and the market share?
No, see, if you ask me honestly, if you really give good content for 40 minutes in an hour is more than enough for you to have a engaged audience. So in that sense, there is still room, but those are understanding over the years that we carry. There's no empirical evidences in terms of research to prove it, but we know that, that is the kind of, flexibility that is there for any radio channel to carry the ads. That's number one. And market share losing, because even at the current level of inventory utilization, we are managing our market share. So if we increase, we'll only increase the market share, but you want us to do a fine balance, as I said, between how much of ads you want to take and how much of content you want to give.
Right, I understand. My second question is in regards to auto. So we've seen some 56% odd growth in the auto advertisement across. So going forward in festive season, do you think we will get to the pre-COVID levels here?
See, the pre-COVID levels of volumes have already been reached in certain categories. So the challenge is the pre-COVID levels of revenues, and that is directly connected to the yield. Again, it's a catch-22 situation. Once your inventory is full, then the rates get increased, and that inventory full, unfortunately, cannot be led by one station. That inventory full situation has to happen at least with 2 or 3 of the leading stations, so that then everybody knows that everybody is in the same plan. Because if you still have other stations which have enough of more inventory to take, and advertisers beyond the point would want to balance themselves by taking those channels because it comes at a lower cost, you will have that challenge. But given a period of time when inventory saturates, you will see that yield increase happening, because that kind of yield in the past has been paid for the medium. So there's no questions asked on that. It is a current situation for which, unfortunately, each one of us are operating possibly at lower yields as compared to pre-COVID.
So what would be the current percentage compared to pre-COVID, the ad yield?
We have reached about 85% of the pre-COVID levels across. So yeah, that's a 10-15%, 15% improvement to pre-COVID levels is still available.
And how much improvement in inventory levels can we see across?
We have moved from a pre-COVID level. If I have to see the average, we have almost moved by about 20% higher than the pre-COVID levels, inventory utilization.
It is 20% higher than the pre-COVID level.
Yeah.
Okay. So I think we are very nearby the break-even level where we can increase the ideals as well.
Yes.
That matter of 10 crores incremental advertisement, if I'm right.
Yeah, because once you increase the rates, that kind of revenue generation is on the cards. It's on the cards. You're right.
Right. And for the festive season so far, have you seen such kind of scenario happening where inventory is taken out and we could increase prices?
So there will be tactical. We will be increasing rates for the period for sure because inventory will increase. It's already showing signs of increase, and the best part is that we are very nimble in our decision making, and we would assume that the market which is saturating, we will see that increase in rates.
Oh, thank you. That's it from my side. I'll join the queue for further questions.
Yeah, thank you so much.
Thank you. Participants who wish to ask questions may please press star 1 at this time. The next question is from the line of Sanjay Kumar from iThought PMS. Please go ahead.
Hi, thanks for the opportunity. Sir, when will the recommendation of the authority be implemented if government approves it? Is there any timeline to take a decision? It could be in favor or against, but is there any timeline?
See, one day of the DAP rate was part of the same trial recommendation which has gone in. So DAP, they have already given us a rate increase which should be up any time now because that recommendation has already been approved. The other two obviously will depend on the ministry to have their understanding as to when they can clear it. So if all goes well, a month or two is max that they will need. If not, given the fact that we are getting into an election year, the priorities of the government may decide on the fact as to when these things can be implemented, if it is even a yes or a no for that matter.
Okay. And if the ALF recommendation is implemented to 4% of gross revenues, let's say today, I think our ALF is at 10 to 12% of revenues. If it comes down to 4%, this incremental 10 crores will flow through to EBITDA directly, right?
Directly, clearly it will flow back to the EBITDA.
Okay. And second, on the DAVP, let's say today government business is 12 crores, 50% increase will mean 18 crores of revenue. So this incremental 6 crores will again flow through to...
It's not 12 crores. Government revenue will be around 22 to 23 in the at the yearly level. 12 crores is going from a H1 level, is it?
Yeah.
Okay, fair. Yeah.
So 50% increase will be 18 crores. So this 6 crores again will flow through to EBITDA?
In the second half?
Yeah, in the second half. Or whatever is the increase, the 50% increase will directly flow through to EBITDA, right?
Yeah, ideally it will directly flow into the EBITDA because if there is any other cost involved, it will be that netted off that, but largely everything will go into the EBITDA. And
any guidance for how much the government share can go from the current, say, 6%?
It can touch to a 10 to 12% contribution from the current 8-9%, 7-8% that the government...
For H2?
Yeah.
Okay. And last question, sir. What will be the current utilization for us and also for the industry?
70% at an all India level, at a 73% to be precise, is the kind of utilization level.
For the industry?
For the industry, for us. Some of them will be at much lower because our shares are higher. So somebody who's at a 8-9% share, as in some of our competition, they'll obviously be at much lower.
Okay. And what point of utilization do you think the ad rates can start increasing?
See, I don't want to really stick my neck out here because everything depends on how the inventory situation happens and how jointly the rest of the people also go into the same inventory situation for them to even take a call, because it cannot be an isolated case. But in our case, if suppose, given the fact that we cross the inventory that we are wanting to take from a ceiling perspective, then marginally we'll start increasing the rates, which like I said, in the previous question also, if we see that even in the current quarter, if the inventory in certain markets will increase, we will increase our rates accordingly, and we are doing that.
Great. Okay. And finally, if I can ask one more.
Please.
Yeah. So if the license period is extended by, say, 1 year or 2 year, 3 years, because the authority hasn't mentioned any duration, what kind of monetary impact will we get because of this extension, say 1 year or 2 years?
So whatever the license fee we pay for the year, if it is 1 year, that license fee cost will be saved for that particular year. While for your information, we have asked for a 3 years extension for the 3 years extension of the renewal of the license. So whatever the license fees that we are paying for the year, that license fee will be saved from our perspective.
Okay, so 20 crores per year of extension, roughly.
Sorry, come again. Sorry, I didn't get you.
20 crores of ALF fee, roughly for 1 year, will be saved.
No. That is not annual. It's an annual license fee that we are talking about.
Yeah. Now I'm just asking, what will be the savings that we get for if the license is extended for 1 year?
They got about 1 crore or something.
Okay. Cool. All right, sir. That's it from my side. Thank you and all the best.
Thank you. The next question is from the line of Anmol Grover from Albatross Capital. Please go ahead.
Hello, sir. Am I audible?
Yes, you are.
Okay, good afternoon, sir. I just have one question. I wanted to know that you're sitting on 300 crores of cash as of now on the balance sheet. So what are your thoughts on utilizing that? Any plans on putting it to the shareholders?
Yeah. So right now, as you know, that an entire digital playout and the way forward for the organization is planned, which includes content creation, content distribution, influencer marketing, which we are currently doing with our artists. So all this is going to be panning out in the next 6 to 9 months, in which all those seeding in is happening. Once that happens, we'll be possibly then clear about where we would want to invest this, keeping in mind that our operational and strength and our strength in content is what we would want to exploit, number one. Number two, because we are in the entertainment space and because there is a lot of content of creation opportunities and distribution opportunities for people like us, we could look at, either investing in distribution of those content or investing in creation of those content as we go forward.
Okay, all right, sir. Thank you.
Thank you so much. The next question is from the line of Rishikesh Oza from Robo Capital. Please go ahead.
Hi, thank you for the opportunity. So my first question is if you could share the volumes that you have done for this quarter.
That's it. No, we have utilized about 73% utilization level for the H1 level, and for the quarter level we have done at 75%.
What was the industry ad volume?
Pretty much the same for the top players, I would believe, because with us and the other listed companies, wherever the ad check markets are there, it will be pretty much the same. Some of them may be 5% lower, or some of them may be 5% higher because of the kind of rate they'll be operating. But pretty much in the same 70 to 80% utilization level.
Okay. And also, sir, if you could share the listenership data, what was the listenership data for us for this quarter?
For the past 6 months, there is no listenership data because they were all coming out with the new data, which was trying to monitor not just radio, but everything to do with audio. Now, that data is still not out, and hence, there is no data available. However, we have commissioned certain data to understand the listenership, and there are some sound, information that I can share is that radio listenership is still high as far as the overall listenership is concerned. But beyond that, if you're asking for the cut from the market, all the data is currently not available. And I think over a period of time, the way radio has been used by brands, and now with, again, not just radio with on-ground, with digital, brands are easily able to assess which are the stations which is giving them great value for money, and hence, we haven't seen much of a challenge out there. But however, any data which is accepted by all will always be a great thing to have, because then there is clear differentiation.
Okay, just one follow-up on listenership. How do someone read this listenership data? Is it like these many listeners, let's say if you have 4 crore listeners, so that means 4 crore people are listening to your channel or what? Like how do I read this?
Yeah, so there is a basic minimum number of minutes that a person is listening to a channel and a minimum time that he listens to the channel. Only then he will be considered as a listener, which is a normal parlance as research and is done from a respondent to each respondent has to actually minimum here that much period of time to be qualified as a listener. And then there are various day parts, which part of the day he's been listening, how much of time he's spending, all those things are captured in that data.
Okay. Thank you.
Yeah.
Thank you. The next question is from the line of Akhilesh P. Please go ahead.
Good afternoon.
Good afternoon.
Sir, in the Q4 call, I think you had called out a growth outlook of 20% for this year. So I was wondering whether you think that is still achievable because we are lagging that.
We had clearly said that we are looking at an aspiration of growth of 20%. Right now we are at 14%. H2, obviously time will tell us how we are. I mean, the current growth trajectory is something which I'm confident we should be able to pull out. But a lot will depend on how soon the various initiatives that we have taken on the digital front and of course the investment from a government perspective, because there's a lot of banking that we are doing, keeping in mind that we are getting into an election year and so on and so forth. So yes, the aim is still to touch that kind of growth for the second half at least. But like I said, it will also depend because we were at a good going rate. You will see Q1 we were at a 20% growth, but unfortunately not just for radio as an industry, for media, July and August was a completely tanked media performance. In fact, other mediums have actually shown a lower growth or degrowth in some cases. So if all goes well as it was in the first quarter or as we envisage, then we should be able to do that. Otherwise, I can only assure you that within the available business that is there for media and especially for radio, we will outperform whatever we would plan for ourselves with respect to us and competition.
Can you speak more about what happened in July, August in terms of
See, the thing is a large dependency on the market sentiment also is how media spends. So if you look at, if there is any reason why marketers believe that, that this year is not going to be as easy given the fact there was so much of, with the Ukraine war, which they ultimately felt will affect oil, which ultimately will affect our overall economy. And now with the, current, the mindset where that may be as projected earlier from a GDP growth perspective, it may not happen and the economy will be slightly under stress. Though India is far more immune to the world economy at the moment from these kind of things. But if that happens, the sentiments, then what people do is that they say that let me invest at the right time. So usually in India, festive season happens to be a right time for them and they say that, let me take a hold for the rate. And this I'm not talking for a particular media, I'm talking about in general. That's why the overall scenario was muted for media per se. So that's one reason why that could happen. And secondly, given the fact that this year entire festival has fallen into a clear Q3, unlike in the earlier years where you have half of October being taken as festive and then the rest of the period going earlier to that. This year everything is in Q3. So that I think could be also one of the reasons why there is a muted July, August for whatever reason. Beyond that, I am not able to put my fingers on anything because this is the same question most mediums are asking as to what is that so much of a challenging thing that is happening. Of course, there is a lot of fragmentation happening. The data as much required possibly is not available. So all those things put together is possibly certain areas of doubt. But in the month of September and now in October, we are seeing those signs are at least beyond us. At least I can refer from a radio perspective. So I am hoping that going forward it will be as positive as we are seeing right now.
Very helpful, sir. Just to understand our business a bit better, how much in advance are bookings placed for ad spots? So, for example, we are in the festive season. in Q3. So is it fair to say that, for the entire festive season, most of the bookings have already been done, or does it happen only?
So unfortunately, radio happens because the reason why radio usually bookings happen last moment is because keeping in mind the marketing challenge, radio is the most easily executable advertising that they can do, because from creating of the commercials to putting it on ads, there's the least time that is required, So keeping in mind, market feedback that they get from the sales team and so on and so forth, marketers on the run take certain calls, especially when it comes to trying to capture maximum share in the available festive period. Hence, a lot of radio bookings don't come much in advance. However, having said that, almost 20 to 25% of bookings do come in advance, but the rest of the things is because the creatives also get modified in the last moment, keeping in mind the challenges that marketers are seeing in the peak of the advertising season that you are talking about. So yes, a lot of them comes 3 days, 4 days before the campaign is to be executed, and as a deadline is fair enough for us also, because it allows us enough time to kind of execute it flawlessly.
Thank you very much.
Thank you. The next question is from the line of Sneha Jain from SKS Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. I wanted to ask, the government advertisement additional that we want to take in case of the coming quarter. So are the margins for the government advertisement lower than other players such as real estate and pharma?
No. Right now, in fact, it's the other way around. Because of the kind of erosion the commercial rates have seen from pre-COVID to now, the government advertising is actually at par, or some cases even little higher than the commercial rates.
Oh. And there would be a no advertising period for 30 or 40 days in this quarter, right? Before the election, even the state and the central election.
From a state-to-state perspective. So if I'm operating, if suppose there is a Rajasthan election happening or a XYZ state election happening, during that period of code of conduct is the only time that you can't carry the advertising. Otherwise, you can carry it throughout. But that again for state election is only for that particular state. So if in Rajasthan, it is only for the Rajasthan markets that we have. The rest of the markets can carry the advertising.
Okay. Thank you so much.
Thank you. The next question is from the line of Riya Mehta from Equitas Investment Consultancy. Please go ahead. Ms. Mehta, your line is unmuted. You may please ask your question.
Thank you for giving me a follow-up opportunity. So my second question is in regards to the previous participant. So you said the government advertisements are at par or even higher than the commercial rates. Is it pre the increase in the ad rates, or this is after the ad rates?
So, currently, even in the current situation, few markets are higher than the commercial rates because of the erosion that has happened over the earlier commercial rates. Right? So that was the point that I made. But with the new rates, obviously, most of them will be at par, or some of them will be really higher like it was in the previous case. More number of markets possibly may move into being a little higher than the current commercial rates.
And how does the government advertisement work? Like, do you get a percentage share from the government, or how does it happen?
See, largely, there are two ways the advertising happens. Largely, if there is a ministry campaign or a particular initiative that the government is taking, by and large, you have an equitable distribution amongst radio players. However, there are certain places where the content that you create and the ideas that you give, if that is in which the government feels that a particular station is far more apt for them, those market shares of those stations may be a little higher than the others. Because very rarely you will see an exclusive ad coming in for any particular channel, because the government doesn't operate that way. But yes, there is a possibility that in a few campaigns you will get a higher share because you have created something which the government has accepted and feels that you understand that campaign better, or you make far more sense for them to kind of take your station more, is the time that you will have possibly a little skew towards your side.
So it is not purely based on market share. Is that correct?
Sorry, market share is a resultant of how they invest in you, right? So when you're saying market share, because I don't think government sits with understanding that you are at a 19% market share, hence I should invest 19% of my revenue. It doesn't happen that way. In fact, in certain markets, my market share is more than 19% in government spends.
Got it. And in terms of the newer initiatives, like for the increase in government rates, it is immediate effective, right?
Yeah, the government rates, we are just waiting for the rates to be uploaded on the online, and that I think should happen before the end of this month. And November 1st onwards, we are expecting the rates will be in place.
And for the other things like the news to be incorporated, that would be instead of the music, right?
Yeah. I mean, it is content for us. So you can say instead of music or instead of whichever way you look at it. You have a 1 hour clock. You can carry 10 minutes of independent music. That again is only after the government comes with that approval, because right now that approval is not coming.
Right. And okay. And second question was in terms of the license fees, the change in the formula, that would lead to around 10 crores of savings annually?
7-8 crores, around 7 to 8 crores.
But that would be retrospective, or how is it? Like, could you explain that?
There'll be no retrospective on that. It'll be from the...
So going forward, instead of we having 20 crores of license fee annually, we would have 12 to 13 crores. Is my understanding right?
Yeah, you're right.
For this year also? Or it would be after it gets effective?
It's not been accepted, ma'am. Once the acceptance happens, only then we can do these calculations. So if it happens this year also, it will be the next 6 months.
Got it. And when is the ministry expected?
I forgot.
Yeah, last question.
I would love to have the answer myself, ma'am. We are putting I mean, the ARI operators are putting their pressure, but we'll have to be. All we can do at this point in time, apart from representing ourselves and making our need to have that approvals in place, nothing else we can do, but it's a wait and watch, ma'am.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Amit Mehindale from Robo Capital. Please go ahead.
Hi, thanks for the follow-up. Sir, my question is on the cash available on the balance sheet. So out of the 300 crores, I think there is also there would be a payable amount for the NCRPS that we issued, right? So if you could quantify what will be the net cash after that.
So that payout would be around 107-8 crore. That would be at the end of 36 months, so 3 years. So after that, so by that time, whatever cash would have generated and also it would be a part of that. 30 crores a year.
Okay, right. And also there will be a yearly cash flow that is being routed through PNL, right? That the hit for that we are taking in the PNL.
Yeah. We are adding up every quarter, so that.
Hello.
So yeah.
Okay, great.
Thank you so much. The next question is from the line of Praveen Sharma. Please go ahead.
Yeah, hello. Am I audible?
Yeah, you are. Yeah. Go ahead.
Yeah. Good afternoon, sir. Thank you for taking my question. Sir, just to go back to this government revenue thing, which is 6% as per the presentation.
Yeah.
In this, I have two questions basically around this. First is, when this model code of conduct comes in, so these state governments, they come up with pre-buying, means shouldn't it have reflected in more advertisement in the quarter which has gone by, or
the quarter which will have that more advertising is in the coming quarters, because none of the state government elections will now start happening in each of those places where the government has announced. So this is the current quarter, and the quarter after that where the increase of advertising will happen.
Okay. And this DAVP thing is only applicable, is it applicable to both state government and central government, or only?
Largely central government. State government, you operate with DIPR, sometimes you operate with from state government, even with commercials.
But they follow the similar rates as the central government has approved.
More or less. Sometimes
okay.
a little higher than the central government.
Okay. And going by your past experience in 2019, like every 5 years we have this 1 year of rigorous election going on, state elections, 5, 6 state, and then central elections, Lok Sabha elections. So 1 year. So do you see, based on your past experience, any ramp up or jump up in in this period of say 9-10 months, wherein we have very concentrated elections?
Yeah, ramp up for sure. But how much of the ramp up as compared to the last two Lok Sabha elections is a matter of conjecture, because it also depends on how for the parties which are advertising, how much flush they are with funds, number one. With all this, thing that has happened with the demonetization and so on and so forth, a lot of that will have its effect in terms of cash available for political parties, A. B, also the lead political parties has to, how much of a threat they believe they have from any of the other parties for them to invest that much more to ensure their victory. So there's a lot of pros and cons in this as to combinations that one has to look. For example, if suppose, if somebody in the BJP headquarters feel that, it's a out and out victory for us, I don't think beyond a point we should invest. Of course we will, then it's a different ballgame altogether. But if suppose the same team feels that, we are under threat in the XYZ markets or regions and we need to kind of up our tempo, then it's a different story. So I said, it's a matter of conjuncture, but to answer your question, in an election year, there will be an upswell for sure, irrespective of these combinations which I've spoken to about. These combinations will only decide how much of investment to happen and not whether investment will happen. So I hope I've made myself clear. There will be an upswell, yes. How much of that upsell is a matter of conjuncture is what I think.
Okay. Now going up, a offshoot question from what you said. So basically, you don't feel that if there is a budget from a particular party or government, then the proportion of which is going to the radio has decreased. It is it is not going into other media because radio seems...
In fact, radio has always been, so there are two things. One is your political parties which will have the opportunity to doing a large air cover or carpet bombing, whatever you want to call, which will mean taking other mediums and so on and so forth. But for local candidates of each of those parties, because they are operating in local specific geo-specific markets, radio will be the, and print to an extent is where they will have to go. And radio adapts themselves easily. So to answer your question, there is no shift of revenues. The medium usage of radio will continue to happen in the period of elections, irrespective whether other mediums are giving them some softs or no softs.
And just a last question, you said that there are sensitivities in news because in today's date with Twitter and Facebook and everything, all news going everywhere, flooded with news, what is the apprehension in terms of allowing FM radios to do, which is a more regulated and licensed body to, offer news?
We are also saying, but, each time when this proposition has come, there has been certain quarters of concern that the government has shown from time to time. And all we can do is kind of advocate for ourselves and put representations. I agree with you completely. We believe as radio operators, we are far more regulated and far more controlled because we follow the AIR policies, which is as regulated as is required. So, hence, we look at this try recommendation with a great deal of hope that news will be allowed by the government, and that will change the, radio industry's ability to generate revenues and also to give value to our listeners.
Okay. Thank you, sir. That's all from my side.
Thank you. We would take that as our last question. I would now like to hand the conference over to Mr. Ashit Kukian, CEO, Music Broadcast Limited, for closing comments.
Thank you. We sincerely appreciate your participation in today's earnings call. Our aim is to inspire and facilitate positive transformations every day, positioning ourselves as a preferred radio brand that is authentic, accountable, and influential. The presentations, earnings release, and results are all available on the corporate website and stock exchanges. If you have any further queries, please get in touch with any one of us or with Strategic Growth Advisors or Investor Relations Partner. Wishing everyone a very happy festive season. Thank you.
On behalf of Music Broadcast, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.